Right, what is going on with the Indian rupee? A question that is being asked by many at the moment. In fact, the Indian rupee rebounded a little bit yesterday after touching another all-time low against the United States dollar earlier on this week. Traders attributing the recovery to likely intervention potentially by the Reserve Bank of India in the foreign exchange market. Is that going to be one of the solutions that is on the table at the moment? Currency finished yesterday at the bell at 89.90 to the dollar, gaining a little from Wednesday's close of 90.19. It's been down as low as 90 or as high as 90.43 during the morning trade earlier on this week. So a lot of volatility when it comes to the Indian rupee. That, of course, could bode well for those looking to send money home. But what's it mean in general? Well, let's find out, because joining us now is the Vice President at the Continental Group in to discuss the Indian rupee and its record lows. The sharpest single session declines we've seen over and recorded this week. Let's ask Abhishek Datta the reason as to why. Abhishek's joined us live in studio. Thank you so much, Abhishek, for joining us live in the studio on a Friday morning, no less, ahead of what promises to be a busy weekend. So let's talk rupee. What's triggered these lows, these sharpest ever single day falls and these record lows?
Good morning. I think one of the first things that comes to mind is the trade tariffs that have come about. That's put India at a significant disadvantage to pretty much every other emerging market exporter to the US. If you compare a 50% tariff to anyone else, it's at least 20 to 30% higher, which makes exports more expensive. The demand for dollar goes up. So the balance of payments, the trade deficit has gone up significantly. It's almost $41 billion last month. That contributes significantly to the rupee's weakness. I mean, imports get more expensive. The other factor that most people are ignoring is the price of gold. Now, India is a significant importer of gold, while the quantity of gold we've imported over the last decade or so has not gone up, but the price going up by 100% has definitely affected our balance of payments.
You mentioned tariffs there, and of course trade's so important to India. The US has been India's largest trading partner for many years now. Again, and in line with the meetings going on in India at the moment between Russia and India, etc., what's your sort of outlook and forecast when it comes to tariffs? Because we've seen a little bit easing of sentiments from the White House in recent times, saying, oh, a deal's on the table, things are going to get sorted, and yet it just keeps getting kicked down the road a little further.
Well, I don't have enough political insight, but, we know...
Come on, Abhishek, you've got the inside line.
But, we know Mr. President is a deal maker, and eventually we are all hopeful there will be a deal. Having said that, though, the Indian economy is doing really well. Yeah. The GDP growth was at 8.2%, which, beat every forecast out there. So, if the domestic economy is doing really well, now that also, affects the currency, because imagine everyone else, look at the GDP as someone's salary. The salary is going up, so they're spending more. When you're spending more, typically your credit rating sometimes takes a hit. Look at the dollar or the Indian rupee as your credit rating, because what you're doing is you're spending more. When you're spending more, you're buying electronics, you're importing more goods. Automatically, the consumption is leading also to somewhere the demand for the dollar.
We'll get back to what's going on in India very shortly, but obviously a lot of our listeners here, based here in the UAE, we've got a lot of non-residents Indians who are listening into the show as well. So current mark for the Indian rupee against the dollar, 89.89. How's that translate? Obviously dirham pegged to the dollar, so you're currently getting 24.54 for the dirham this morning. I mean, again, we're talking about a negativity when it comes to currencies, but the positive side is NRIs and those going to India are going to get more for their dirham.
Absolutely. One thing that I would like to point out, though, is that is your consumption in the future going to be in the Indian rupee? So if someone needs to pay off loans, if someone needs to buy an asset or pay for regular stuff in India, go ahead, remit as much as you need to immediately. If you can prepay some of your loans, good for you. But if you're going to spend in dollars tomorrow, if you're going to go take a holiday, if you're going to send your kids for education abroad, probably should not be sending the dirhams back to India, because when I came to Dubai 15 years back, I was sending money home at 11.5. Today it's 24.5. If I'd done nothing, I would have and kept the money in a fixed deposit, I would have probably doubled my money easily without doing anything. So it's something that we need to consider. If you can match your expenses to the currency that you hold in the future, go ahead. If your expenses are going to be in the Indian rupee, go ahead and remit as much as you can. Because people are looking at it more like a Black Friday sale, I think. So, go ahead and acquire more Indian rupees because it's on sale.
And has there been a spike in remittances?
Absolutely. Yeah. I mean, we've seen that historically with when the Pakistani rupee, depreciated, when the Philippine peso does. We see that spike. But you also have to know that that's also a strength for India, because 120 to 130 billion dollars of remittance is probably the largest in the world that go to India every year. And a spike like that is also going to attract a lot of dollars to India. So it's interesting.
Again, in terms of that, and from a remittance point of view, I mean, do people need to be a little bit more financially savvy, as you say, because this, is a market goes up and down. So you need to plan according, much like you would financial plan in your home country.
Absolutely.
Yeah.
So, this is something that a lot of people don't consider. Everyone looks at the Indian market returns and say, the Nifty 50 does 15% returns every year. But let's say your currency depreciates by 4% every year and your real inflation is 6%, though right now the inflation is really low. So if your real inflation is 6%, your currency depreciates by 3 to 4%, and your market still returns 15%, your net return is only 6% in dollar terms. So, that is something that you need to consider. So diversifying into hard assets, hard currency assets is very important for us Indians as well. While the Indian markets will keep doing well, the currency depreciation is real.
Just finally, an advice to those, and I know you've just come back from India, so again, you've been able to see this firsthand within the last week. Those that are travelling to India in the coming months, those that are investing into India as well, what's the sort of house view from the Continental Group with regards to transferring money to India or changing your dirham into rupee at present? Opportunity or red flag?
I think there's definitely opportunity. While valuations at the moment seem stretched, it is important to always have India in your portfolio. Now, don't think of 3 to 5 weeks. Look at 3 to 5 years, and there is definitely a scope for investment, high investment returns in India. But you have to, space it out over the next few years. There will be volatility coming. There is trade tensions, things that you cannot predict or factor into your, all your equations at the moment. But definitely, you should continue to have some exposure to India.
But have fun over the festive period as well. Abhishek, really appreciate your time and your expertise as well. Abhishek Datta is the Vice President at the Continental Group, joining us live here in studio. Have a great festive period, have a great new year, and we'll catch up in 2026.
Thank you.